Welcome, guys. This is Melody FS Academy. Um, I want to welcome you to another episode on the smart money concepts trading model. Okay, so if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, so in today's episode on the smart money concept trading model series, we are going to be looking at reclaimed blocks, and it's going to be more like a two-in-one uh, video. Okay, we're going to be like a combination of two concepts in one video. Okay, so we are going to be looking at reclaimed block and understanding market maker buy and sell models. Okay, so this is understanding market makers buy and sell model is a very important concept in smart money trading. Okay, so in when you are trading SMC, uh it's very important you understand this. Okay, so now with that further ado, let's get started. Now we're going to be starting with the market maker buy model. Okay, so as usual, we're going to start with graphic depiction and graphic illustrations before we get down to reprice action. Okay, so now of course this is price. Okay, let's say we pull up our chart, and in this case we have price reaching for an anticipated support level or institutional reference point. Okay, so this is price currently reaching for this could be a fair value gap. Okay, it could be a bullish order block, it could be a breaker block, a mitigation block, or whatever institutional reference point that is below price. Okay, that's price that is currently drawing price, that price is being drawn to. Okay, so now as you can see, we have price reaching for that. Okay, so let's say you pull up your chart and you saw this price action, okay, of price reaching for a particular support level, or maybe let's say price had already reached for reach. Okay, and it's about reacting of it. Okay, so what do we do with this information, and how does this come in terms of the market maker buy model? Okay, so now going down further, now as price drops and reach for that support level institutional reference point. Okay, as price drops down and reach for this anticipated support level or institutional reference point, the market makers are going to be scaling in early. Okay, they are going to be scaling in early. In other words, they are going to have areas where they start buying early because their positions are much larger than us as retail traders. Okay, so what does this mean? It means that even as price trades lower, as price declines lower, the smart money and market makers which have larger pockets than us as retail traders, they are going to be buying early. Okay, so even in a down trade, smart money are going to be buying early, and they are in order to scale their positions, because they have large positions that cannot be filled with just a single transaction. Okay, so as price declines, as price trades lower, reaching for that support level or institutional reference point, smart money are going to be accumulating even at price drops lower. Okay, so now as price trades lower, this is known as the sell side of the curve. Okay, this is the sell side of the curve. Okay, we are going to come as we go further, we're going to understand the sell side and the buy side of the curve. Okay, so see, this is price being delivered only on the sell side. Okay, this is the sell side of the curve. Okay, and as price drops, reaching for this support level, smart money are going to be scaling off their positions. They are going to be buying early. Yeah, so they buy earlier than us retail traders. Okay, they accumulate long positions earlier than us as retail traders, because they have large positions to they have large funds to manage those positions, to hold on to those trades even as price declines. Okay, they have the capacity to hold on to such trades in terms of time period. Okay, so now as price reach below for the support level, smart money are going to be they are going to start buying early. Okay, so this is known as the sell side of the curve. Okay, so going down further, smart money can't facilitate their orders in one transaction. Okay, they have to scale that position in a form of hedging. Okay, so the process of by which they accumulate longs even as price is declining is known as hedging the market. Okay, so that's smart money hedging the market, right? They accumulate positions even though the trade is currently bearish, they are actively buying. Okay, so now those that see the retail traders that that saw those short-term rally upwards and went and they bought alongside smart money are going to get taken out because they don't have such capacity, because that short-term rally you are seeing, that short-term rally that occurs is the hedging taking place. Okay, that is smart money accumulating. Okay, so when we see such short-term rallies in price in a in a declining market, in a bearish market, we know that immediately we are uh, aware, okay, that smart money are currently accumulating. Okay, they are currently accumulating long position. That is eventually what is going on right there during a decline, a market that is declining. Okay, bearish market. Okay, whenever we have a short-term rally upwards, they are going to be that is smart money accumulating long position. Okay, so as price declines, there are going to be a short-term rally, right? There are going to be some short-term rally upwards, okay, creating a short-term highs. Okay, so that is smart money accumulating positions. Okay, so as the market moves lower, every time we see a little bounce in price action, okay, that is a minor displacement, showing that there was new accumulation being taken into the marketplace. Okay, so in other words, smart money is currently accumulating new long positions. Okay, so I'm including this note for most of us that are requesting for the subtitles. Okay, so in that way you can get to understand what I'm saying, and you can eventually see what I'm trying to explain on the screen. Okay, so this is basically what I've just said. Okay, this is just what I made mention. Okay, so as the market moves lower, every time we see a small little bounce, a short-term bounce in price, okay, that creates a displacement. Okay, that creates a displacement, showing that indicates that new positions are being accumulated by smart money. Okay, new long positions are being accumulated by smart money. Okay, so let's go down further. So now in terms of using graphic illustration, it's going to look like this. Okay, so as price declines, as price is reaching for the anticipated support level, okay, the smart money are going to be buying early. Okay, they are going to be this short-term rally we are seeing in price, as even though as price is declining, is on a bearish move. The short-term rally we are currently seeing, this is new long positions be accumulated by smart money. Remember, they have large pockets to hold on to this kind of trades. Okay, they have large pocket to hold on to this kind of trades. Okay, so that brings us to the idea of what a market maker buy model is. Okay, so a market maker buy model is a price swing lower, that is a price swing lower that trades higher. Okay, it is just understanding that the market is going down to go higher. Okay, so basically a market maker buy model is simply price going down, trading down to go up. Okay, so price for, in other words, for price to accelerate higher, it has to decline. Yeah, it has to drop in order to go higher. So the process by which it drops down, reach for a institutional reference point, anticipated support level, the process by which it reaches for that support level, and that is the market maker buy model. Okay, so market maker buy model is just a price swing lower that trades higher. Okay, so this right here is a market maker buy model. Price declined into reach for a support level and starts creating higher prices, start expanding higher. So this is a basic market maker buy model. Okay, so market maker buy model is simply the price trading lower to go higher. Okay, that's just how the market maker buy model is all about. That's just the basic definition of it. Okay, so now going down further, as the market price, as the market starts pricing new higher highs, okay, we are going to be focusing on those old down candles during the sell side of the curve. Okay, so in when we talk about price creating reaching for this support level, okay, so when we talk about market maker buy model or sell model, it's simply like splitting price into two curves, okay. So we have the sell side curve and the buy side curve, okay. So the left side is the sell side curve and the right side is the sell side, is the buy side curve, okay. So now as price reach for this support level, as it declines reaching for this support level, we are going to be focusing on those old candles during the sell side of the curve, okay. In other words, we are going to be focusing, we are going to be making reference as price reached, as price reached so right now price has already reached uh for the institutional reference point, for that support level that we are anticipating it to reach for, okay. So price has already reached for it, okay, and price starts to starts pricing or start creating a new higher highs, okay. So price has already reached for that support level and it starts creating higher highs, okay. It starts accelerating now. The what we are going to be focusing on right now as price starts creating higher highs are those down close candles, are those bearish order block. In other words, those down candles, as price starts declining, those last down candle before those short term rally, that short term rally up, we are going to be making reference to those down candles, okay. We are going to make reference to those bullish order block, okay. So let me go back to this graphic quickly, okay. So what we are going to be making reference to when price reach for that support level, we are going to be making reference to the last down candles before this up move, the last down candles before this up move, the last down candles before this up move. What is going to happen is that price is going to, as it starts go as price starts trading higher, price is actually going to reclaim those candles, okay. That is what is known as a reclaimed block, okay. Price is going to reclaim or going to recapitalize those bullish order blocks, okay. So as price starts expanding higher, it's going to reclaim, in other words, going to react off those last down candles that we have previously used to buy this short-term rally, okay. That was previously used to buy price up, okay. So the last down candle at this low right here that created this short-term bars, the last down candle at this low right here that created this short-term bars, as price starts rallying higher, is going to find support at those candles, okay. So that is basically what a reclaimed block is, okay. So let's go down further so that we can understand it more, okay. So now every time there was a bullish order block that was created on the major price swing going lower, okay, and it saw a little bit of a minor movement higher, that has indicated that there was hedging going on, and that down candle is what we are going to reclaim or watch price recapitalize that old order block now that we are in the buy side of the curve, okay. So remember, when we talk about the buy or sell model, we have two curves, okay. We have for the market maker buy model, price has to go down in order to go up, okay. So the process of coming down, that's our sell side of the curve, because that's the selling, okay. Price have to be sold in order to be bought, okay. So they have to be selling in order for buying to take place, right? So now every time we see a bullish order block being created right here, okay, as price drops every time, because in this short-term rally upwards, you are going to be bullish order block created right here, okay. So every time price creates this order block right here, price creates this order block right here, price creates another order block right here, as it's creates this short-term displacement higher. Every time price creates this bullish order block, that what was actually going on right there was hedging, okay. The market was being hedged by smart money, okay. And that down candle, okay, is what we are going to reclaim or watch price recapitalized on as we trade higher, as we get into the buy side of the curve, okay. As price starts expanding higher, in other words, price has already reached for that level and it starts going trading and expanding higher, okay. So those down close candles that we are used to buy those short-term rally, price is going to make reference to them. It's going to reclaim them. Okay, it's going to reclaim them or recapitalize on them. Okay, so that is just what a reclaim block is. Okay, so we are going to still look at the definition as we go further. Okay, so now going to the proper definition of it. Okay, a bullish reclaimed block is a candle that was previously used to buy price. Okay, and a short-term bounce confirms minor displacement. Okay, in the buy side of the curve, these old blocks will be reclaimed longs. Okay, will be reclaimed longs. In other words, these old blocks are going to be used as some sort of support. Okay, so in other words, as price declines, as price was bearish, as price traded and reached for this support level, as it goes or as it starts rallying up, okay, price is going to mash with these previous order blocks. Price is going to be mash with this previous order block. Okay, so whenever it gets to a point where there was a previous order block, okay, there was a previous bullish order block that was used to to buy the market upwards, to buy a short-term rally upwards, price is going to reclaim those blocks and they are going to be using it as long. They are going to use it as kind of support to enter, to take more long positions. Okay, they are going to use it to take more long positions because right now we are currently going up. Okay, so price is going to react off those old bullish order blocks that were used on the sell side of the curve to buy price up. Price is going to reclaim those other blocks to go higher. Okay, price is going to reclaim those other blocks to go higher as it enters the buy side of the curve. Okay, so for the buy side of the curve to come into existence, price must have reached into for the anticipated support level. Okay, until price reach into that anticipated support level, the buy side will not come into existence. Okay, so price must have reached for that anticipated support level or institutional reference point. Okay, so I hope we are getting the picture of what I'm trying to say, right? So let's go down further. Now let's look at how this looks in price. Okay, let's look at how it looks in price action. Okay, now we have price. This is the sell side. Obviously this is price reaching for a support level. Okay, so this old low right here, this although it's not shown in this data, this is price actually this might be price reaching into an old bullish order block or fair value gap, or it might be a mitigation block or any of the institutional reference point. Okay, so as you can see, price was declining. Okay, price was declining. Now when we talk about price, market makers hedging, we are making reference to this short-term little bounce. Okay, this short-term little bounce, as price, although price was declining, smart money were currently accumulating long positions in this downtrend. Okay, smart money were accumulating long positions even as price was dropping. Okay, so now we are going to zoom in and focus and look at and take a closer look on how it looks in price action. Okay, when we talk about the sell side. Okay, so now this is the sell side, right? This is the sell side liquidity. Sorry, the sell side of the curve. Okay, so this is the typical market maker buy model. Okay, for a buy model is simply price swing that trades lower to go higher, right? That's just the definition of a buy model. So when we are looking at a buy model, we are looking at a market that is going lower, reaching for a support level, okay, to go higher. So that's just a buy model. So now as you can see, when we talk about the bullish order block, in this case, okay, we have a trend that is bearish, right? So now when we talk about the order blocks that were created, we make reference to the last down candle before each rally upwards. Okay, so the rules for a reclaimed order block or a reclaimed block is there must be some sort of displacement. In other words, price have to trade away from that block, from that other block. Okay, so as you can see, we have the last down candle before this short-term rally up. Okay, so we are not making reference to every down candle at the sell side of the curve. Okay, we are only making reference to those that have displacement, that create displacement, short-term displacement. Okay, so we have this last down candle before this displacement higher. Okay, so we'll mark that out. Okay, I'm using this, I'm just placing the horizontal line on it so that as we go into the buy side of the curve, we react off it as we go into the buy side of the curve, right? So we have our anticipated support level down here, right? So now we have our first bullish order block. Price reacted off, created a short-term displacement and continued lowered. Then you have another last down candle before this short-term displacement, right? Then price trades lower. So every time this happens, this is smart money actually accumulating long positions. Okay, this is smart money accumulating long positions. So those that bought alongside of them are going to get smashed out, are going to get taken out. Okay, stopped out. Okay, so now we have the last down candle before this up move, right? So we have a down candle and we have a displacement, right? So we mark that out. Okay, we mark that out. Then we have another down candle before this displacement, right? And eventually we reached for that support level going into the buy side of the curve. Okay, so now let's go down, let's go to the buy side of the curve. As you can see, we already have our range right here. Okay, so price has already reached for the anticipated support level in the higher time frame. Okay, so let's go into the buy side of the curve. So now we are expecting higher prices. Okay, we are expecting price to start rallying up from here, creating higher highs and higher lows, right? So now this is the buy side of the curve, and this is the other blocks we matched out from on the sell side, right? So now as you can see, let's see, price respected it a bit. Okay, then went through and trade back a little bit, but that was not much of a move, right? So take a look at this. Okay, we had this price actually came back and recapitalized on this. Okay, you can see we had a one-time bounce from it. Price came back again and bounced. Look at the heavy movement from it. Okay, so this was reclaimed OB. So the process of price coming back to this is reclaiming this old bullish order block. Okay, so price is actually recapitalizing on that old bullish order block that was used to buy the market up, that was used to accumulate long positions to create this short-term rally. Okay, so they are going to make reference to that in the future again to accumulate more longs. So that is what we eventually we see here. Okay, so price, they reclaimed that old order block and accumulated more long position, right? So price went off, didn't react off this, went off and came back, and they accumulated, reclaimed more positions on this OB as well. Okay, so you can see price expanded, then we reached for that resistance level we are anticipating, we anticipated. Okay, so eventually we reach for our target, right? So that is just what a market maker buy model is. Okay, so a market maker buy model, I can't stress this enough, is simply price trading lower to go higher. Okay, trading down to go high. Okay, so our reclaimed OB comes into play once price reach for our anticipated level or support level. Okay, so once price reach for that, we can go to the sell side of the curve and look at for all the down candle that has a displacement with them. Okay, that has a displacement. So the rule is simple. Okay, the down close candle must have a displacement at its disposal. Okay, no, in other words, not every down close candle should we be interested in. Okay, we are not going to be interested in all down close candle. It has to have some sort of displacement. Okay, it has to have some sort of displacement. Okay, some sort of displacement. As you can see, we had displacement and display, although it's not more. This is the 1 hour time frame. Okay, if you view it from the lower time frame, you will see that that was a huge move, right? So we have to have a displacement. Okay, so that is the market makers buy model. Okay, of course you can see it, the previous order block that was used to bought up price. Okay, the buy up price in the sell side of the curve was being used to reclaim, to accumulate more long positions on the right side, which is the buy side of the curve. Okay, so that is just that for a market maker buy model. Okay, now let's go for a market maker sell model. Okay, so of course we have our price action data, right? So for a market maker sell model, we have to see price go up to go down. Okay, so we have price reaching for an anticipated resistance level or institutional reference point. Okay, so we have price reaching for it. Okay, as you can see, price was reaching for that level. Okay, so let's go down for that. Now this will be our buy side of the curve. Okay, this will be our buy side of the curve. So a market maker sell model is a price swing higher that trades lower. Okay, it is just understanding that the market is going up to go lower. Okay, so that's basically what I've just said. that is a market maker sell model, is just price going up to go down. Okay, so every time that there was bearish order block that was created on the major price swing going higher, and it saw a little bit of minor movement lower, that has indicated that there was hedging going on. Okay, and that up close candle is what we are going to reclaim or watch price recapitalize. Okay, or watch price recapitalize that old order block now that we are in the sell side of the curve. Okay, so in terms of when we have a bullish trend, we have to see higher highs and retracement. Okay, so every time a retracement happens, there's going to be a bearish order block. Okay, there's going to be the last up close candle before the down move. So that is what price is going to recapitalize when we go into the sell side of the curve. Okay, so price is going to look to mash up those previous bearish order block that was used to accumulate short positions in a bullish trend. Okay, so by the time the market was going up, smart money were selling early because they have large pockets and their positions cannot be filled in on a single transaction, right? So as we are going up, they were selling early. As we are going up, they were selling early. As we are going up, they were selling early. Okay, so those bearish order block that was used to sell the market short. Okay, when we get to the sell side of the curve, uh the price is going to make reference to those bearish order block. Okay, price is going to make reference to them in the future. That is just basically what the market maker sell model is. Okay, so now as we go into the sell side of the curve, okay, price has already reached for the sell side of the curve to come into play. It indicates that price has already reached for that anticipated resistance level. Okay, so now as the market starts pricing new lower lows, okay, we are going to be focusing on those old up close candles during the buy side of the curve. Okay, so in other words, as price started going up, those those up close candle, which is those bullish candles, those last bullish candles before the down move, before the short term decline. Okay, before the short term decline in price, we are going to price is going to make reference to them. Okay, price is going to make reference to them. Okay, so that is what price is going to reclaim. So let's go down further and see. Okay, so a bearish reclaim block is a candle that was previously used to sell price, and a short-term decline confirms minor displacement. Okay, in the sell side of the curve, these old blocks will be reclaimed short. Okay, this old block will be reclaimed short. So now, in other words, so it's just basically the same thing as the buy side, as the market maker buy model. Okay, but in this case we are expecting the opposite. We are expecting price to trade up in order to go down, right? So now as price goes up, as it starts retracing, those bearish order block that was used to sell price short, that created that short-term decline. Okay, as we as we go into the sell side of the curve, price is going to mash up those those bearish order block. You are going to reclaim them. They are going to recapitalize on it. Okay, so that is just how it works. Okay, so let's go down into price action and see how that looks like. Okay, so basically we have this is the same model. Okay, we have price going up to go down. Okay, so we have our anticipated resistance level up here, right? We are anticipating price to reach for that. So as price reach for that level and starts pricing lower, okay, we are going to make reference to the last up close candle before this price declines. Okay, so let's zoom in and see how that looks like. Okay, so now this is the buy side of the curve, right? So let's taking a look at this. You can see we are making reference to the up close candle before the short-term rally, right? So we have one right here. We have displacement. Remember the rules. The rules is that you must have a displacement. Okay, so we have this little one right here, and we have this displacement, right? Then we have this last up close candle displacement. Okay, so then we have okay, you can see we have this one right here before this displacement, right? We have another one right here which is basically equal with this. Okay, so now going up, we have this right here before this short-term displacement, right? We have this up close, this last up close candle before this short displacement, right? We had this last up close candle before the short-term displacement. And okay, let's go down, or let's go up. We have this short-term this up close candle before this short-term decline, right? Then we have this before this short-term decline. Okay, obviously they are intertwined. Okay, some are intertwined into each other. Okay, this is actually intertwined with this, but this cannot be viewed as a bullish sorry, bearish order block, because there was no displacement. Okay, remember, there have to be displacement. Okay, so you can see we have displacement right here, so this is a valid bullish bearish order block here. So the last up close candle before this short term move, the last up close candle before this short term move. Okay, so now we have all our bearish order block mark out on the buy side of our curve, right? So now let's go to the right side of our curve and see if price reacts off it. Okay, so now we have the first one. Okay, this is price reaching for that old resistance level, right? Now it starts creating lower lows and lower highs. Okay, so we have our first bearish order block from our buy side of the curve, right? As you can see, price reacted off it, moved, sold off aggressively, reacted off another bearish order block, okay, sold off aggressively, reacted off another one, sold off aggressively, came back and reacted off another order block, okay, sold off aggressively, reacted off this, sold off aggressively, and reacted off another one right here. Okay, so that is just how a reclaim block, or what a reclaim block is. Okay, so a reclaim block is simply the use of a candle that was previously used to sell or buy price up. Okay, in terms of when we are talking about a sell model aspect of it, the bearish order block that was used to sell price, okay, in an uptrend. Okay, the bearish order block that was used to sell price in an uptrend, price is going to mash up those order blocks as it goes into the buy side, sorry, the sell side of the curve. Okay, so that's for a market maker sell model. Okay, so the process of price going back to reclaim those block is what is that they are referred to as the reclaim block case. So that's reclaim block right there. Okay, so I hope we have found this video helpful and insightful. Please, if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified when we upload our weekly contents, and I do hope to see you guys in the next episode. Okay, so do have a great weekend. Okay.